Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide divorce mediation and valuation services in St. Louis, Missouri. Today, we are going to discuss passive appreciation in separate property in divorce and the external market forces with Dr. Ashok Abbott. He's an associate professor of finance at West Virginia University and founder of Business Valuation Incorporated, where he provides value by determining statistical significance, validating economic models, establishing causality, and providing rigorous empirical support. So major research, when you are kind of identifying these market forces, how do they then relate to the business valuation? Like, how do you incorporate them or how do you use them in that capacity?
So remember the kind of the catechism of valuation, revenue ruling 5960, says economic conditions is a major factor in what the business is worth at a given point in time. Right? And that's where we need to go, is what are the economic conditions? What are the conditions that are impacting this business? Because not all businesses are impacted by all conditions all the time. Okay? So the changes that occur over time, especially in this case, during the course of that marriage, when the starting point is the value at the beginning and the ending point is the value at the end. What are these factors that impact this business that are most important, having an influence on the performance of this business? It could be its ability to sell, it could be its ability to make money, it could be its ability to be for the valuation person to put that revenue stream and expense stream into net cash flows and then apply the appropriate discount to create a value. So these are all factors that come into play. Okay. So we have what we would call the cash flows that are coming into the business and the rate at which they are being discounted. And important thing is that we are not talking about an individual being extremely personable or a good provider of a particular service or product. An artist that paints a beautiful mural is in demand. But there has to be someone who needs that mural to be painted or wants that mural to be painted and has the ability to pay for it and sees any benefit coming out of it. Okay.
Right.
So that's where we come to this distinction between what are these extra, aside from the desire and the ability of the customer to pay for it, what is bringing together that demand and that supply so that an exchange takes place.
Well, and I think we could even use the pandemic as a good example.
That's a good example.
That everybody, is like, well, the pandemic must have lowered everybody's cash flow. That's not really specific. Like, yeah.
Look at Amazon. What has pandemic done for them?
Right.
Shifted retail out of storefronts into Amazon's warehouses. When they have almost tripled their daily deliveries during this period when everything else is shut down.
Right. Well, and the market forces could affect different providers in the same industry differently as well.
Right. Depending on, even though we say the same industry, question is, what is really the industry, the sub-niche that we are talking about?
Right.
And as we start today looking at, for example, population, the customers that are available. Okay. Population may not be just individuals. It can be institutions. It can be any entity that consumes that product or service from the perspective of valuation is a consumer. That's the population we are looking for.
Understood.
Right. So that's why it's extremely important, rather than just saying population went up at a rate of 0.5% per year over the last century in US. Now, question is, who are these individuals that we are talking about? Or who are these entities that we are talking about? Okay. Selling on a business-to-business market is very different than selling to a business-to-consumer market. Okay. So when we look at population, we have to see what is the population that we are talking about. Okay. And the beauty is that your tax dollars pay for a wealth of information that is created and disseminated and is available for free for any practitioner. You have different age groups, you have ethnic buildups, you have male female classifications, you have children, you have adults, you have retirees. All of these different groups are identified and tabulated. So you don't have to do that. That work has already been done, and you have already paid for it through your taxes. So might as well use it.
Right. And government data is really good to use in litigation formats.
Right.
So I think it's helpful.
See, because then the situation, you do not have to prove that this number is true. Whereas if, let's say, we did a sample survey of a population,
Right.
in a particular county, we went to all the businesses and said, oh, how much do you spend in postage every month? Is that reliable information? Maybe not, because what percentage of population you're going to be able to survey?
Right.
Okay, it's a question of resources. Okay, but the data that are available, that are put together for you using your tax dollars, are already tabulated. You can go down to county level, statistical area level, and you know what is the number of individuals, how many children are there, how many women are there, how many men are there, how many retirees are there, how many people of working age are there, how many teenagers, how many tweens. All of this information is readily available and out there.